Hello, and welcome to this week's edition of Tax in 10 with me, Rachel de Souza, and Andrew Robbins. We are both tax partners in RSM's London office and have a wealth of experience in dealing with a wide range of private client matters. Your feedback is valuable to us, so do keep it coming, especially if you have thoughts on any topics you would like us to cover.
Rachel, I had a conversation with one of my clients a few days ago about a situation that unfortunately we see increasingly commonly. My client's mother is in the early stages of Alzheimer's, and so although she's physically very healthy, the time will come when she needs to move out of her home and into care. Now, in this particular client, the mother had talked to her son in the past about giving him her family home, which, like a lot of people, it's her main asset. But yeah, not surprisingly, I guess, she never got around to actually doing anything. And they're now in the situation that because she no longer has mental capacity, my client is afraid that basically it's too late to do anything. So I know what I said to him, but what would your reaction have been to that?
Okay, well, I'm going to give you a politician's answer to that question by saying, Andrew, that's a very good question, but before I answer it, I would like to talk about something else entirely, because I think we need to remind ourselves about the basic Iht rules and with residential property before we go any further.
Okay, so as a refresher, if you give away assets in your lifetime and survive for 7 years, then the value is left your estate for Iht purposes and there are no tax implications, provided you don't carry on using the asset you gave away. If you give away your family home, that gift is generally exempt from capital gains tax as well. Whereas if you give away other assets, you could actually have a CGT liability on deemed gains that you make.
That's right, of course. And we shouldn't forget the smaller Iht exemptions, which is just the £3,000 annual exempt amount and the £250 per person that you're allowed to give away each year. There are a few other of those, but those are the two sort of main ones that people use.
True. So this is all great if you survive the gift by more than 7 years, but unfortunately that doesn't always happen. Now, as we know, where Iht is payable, the first 325,000 is taxed at a zero rate, which is why it's called your nil rate or band, or NRB in the jargon. You may actually qualify for 2 nil rate bands if your husband or wife died first and left everything to you. So that can take up to £650,000 out of the charge to Iht. And then on top of that, there's a further Iht nil rate band of up to 350,000 for your main residence. Now you add all those together and that gives you a maximum £1 million Iht exemption. But the property nil rate band only applies if the total estate is worth less than £2 million. And I'm really not going to talk about the details here, but it's worth mentioning that you can get a so-called downsizing relief, so that even if you sell your main home and buy something cheaper, the nil rate band extension can cover the value of the original home, not just the one you're living in when you die.
The way the nil rate band extension and downsizing relief works is enough to give anyone a headache. So let's stop there and go back to the question you asked me in the first place. One obvious worry before we think about doing anything is that your client's mother is still alive, but no longer has mental capacity. And that means, of course, that she cannot give away her assets. The good news in this case is that not all is lost, because an application can be made to the Court of Protection to enable her assets to be given away during her lifetime. Now, the courts can take into account all of her circumstances and in particular will want to hear if she had previously talked about giving assets away. This has got to be in the context that the decision must be in her best interests. And what's interesting is that this doesn't necessarily mean you are trying to maximise her wealth. In fact, in a 2019 court case, the court agreed that it was in the individual's interest to reduce her IHT exposure because the family was able to show that she had already considered giving assets away.
I agree. So it's all very fact specific, but loss of mental capacity needn't stop families from taking steps from doing what's best for them collectively. And I think in the court case that you were referring to, the point was they were able to show that it was really important to the individual that to protect the well-being of their family. So it actually, in my client's mother's case, if we could show that it was going to make her feel better, or would have made her feel better if she had mental capacity, to know that she'd given these assets away, then that forms part of her welfare.
So, with all that in mind, there are a couple of possibilities that you might think about, especially if a family member is going to move in to take care of the individual. In those circumstances, you could actually give the carer a share of the house. So, for example, I have seen counsel suggest if a son moves in with his mother, the mother could give 90% of the value of the house to the son, which means she would only be left with 10% of the value on her death. And of course, this is all provided things are done properly. And in that example, you don't even have to pay rent because the mother is occupying by reason of her 10% interest. Where the family member is not going to move in with the parent could still decide to give the whole house away. But for that to be effective for IHT purposes, the parent would have to pay the full market rent. But of course, that would be taxable income in the hands of the family members.
And in fact, in my client's case, that second option might actually be quite attractive because they're expecting mother to have to go into care within 2 to 3 years. And this way she could stay in the house for as long as she's able. But we've started our IHT clock running immediately with the gift. So although it does have the downside that she's going to have to pay market rent, and son, who is a top rate taxpayer, will end up paying tax of 45% on that rent, potentially it saves 40% IHT on the whole value of the house. And you know that when you crunch the numbers, that's a pretty attractive trade-off. It's also important actually in my client's case that his mother has enough liquid assets to cover the cost of that rent and actually her care for life if she does go into a home. So we're not giving away things that she's going to need that wealth personally later on. And the other thing that I think is a big factor in this particular case is that she did talk about making a gift to the house in the past. So this is kind of carrying out her wishes and is consistent with what is best for her in the overall context. So it is quite complicated. It's very fact specific, but so long as mother's best interests are kept in mind, I think the family is in a lot better position than they actually thought they were.
Absolutely, I agree. Despite what your client thought, it turns out that there are, still quite a lot of options which, he could consider. But I think that, the key point is let's not forget the obvious here. The best approach with IHT planning is really to start that planning before, the parent or anyone is old enough to suffer from mental impairment in the first place. And True. As we all know, there's lots that can be done in order to start giving away the assets and reducing the overall value of somebody's estate. Good. So now we've sorted that one out. I think you mentioned to me you've got some music recommendation this week.
As you know, I am very trendy and down with the kids when it comes to music.
Yes.
So my recommendation is the debut album by Wet Leg, which is just fantastic. I have a number of their tunes in my head as earworms at the moment, and I'm just going around. It just makes me smile. These are 2 or 3 minute long songs, typically. Very, very clever lyrics, sometimes laugh out loud funny. Really catchy, sort of melodic tunes, with a bit of sort of indie jangly guitar underneath. Wet Leg, brilliant. The only thing I would say is does contain quite a lot of adult content. So just be careful. If, like me, you're playing it really loud at home, make sure that, in my case, your cats have their ears covered so that they're not shocked.
Yes, indeed. It definitely needs to come with a trigger warning on that one. So thanks for that, Andrew. Anyway, as ever, thanks for listening. Please do let us have your comments or feedback. And as a reminder, we can be contacted at rachel.d'souza@rsmuk.com and andrew.robbins@rsmuk.com. Until next time.
Bye.